So I wouldn't take this just now. Dollar CAD we looked at already. Aussie Kiwi we looked at already. Sorry, Aussie Kiwi we didn't look at yet. Not enough in it. Not enough in this at all.
Leon,
yes.
Let's jump on GBPAUD because I think, let's see if we have a breaking structure where we can get in. Because I want to take revenge of my peeps. My peeps back.
Hey, you know what we say about revenge trading?
Yeah, forgot about that. It's not about me. It's for you.
I love it. Okay. Do you want me to take a look, or do you want to take a look?
Yeah, let's take a look together.
Okay, so look, we're on the daily chart here in Sterling Oz. All right, on the daily chart. What do I like about this? We hit a very, very clean trend resistance, trend support here, excuse me. A very clean trend support. It goes all the way back. I could show you if you wanted me to. This goes all the way back here. All right. So the fact that we've bounced off this trend support, I quite like that. Okay. Now, in addition, what we do have is lots of room for this to grow. Loads. I mean, if we start moving up into here, there's hundreds of pips of possibility here. And so what we really want to do, I'm going to spend some time on this actually, because getting into this trade could really, really yield some very, very nice risk to reward. So now we're on the 2-day chart. Let's just go on to the daily. The whole idea here is to start with the widest possible time frame, to be like an eagle. All right. And you want to find your prey, and you want to find your prey from high up in the sky, which is why we started looking at the wide time frames. It's why we started looking out like this. We know we're in an uptrend. Okay, cool. We're safe to make a buy because we're in an uptrend. And now eventually what you start doing is you start circling. The eagle starts circling and circling and circling. And our version of doing that is dropping down onto the lower time frames. We're circling until the point where we can swoop. And that's where we find our entry and we make a potential trade. I'm telling you now, though, when this goes, if this goes, it's gone to the sky, right? It's literally gone to the sky. So let's see if we can find a potential entry here. Okay. So what I'm looking for areas where the price, like, let me take out some of the chart. I'll take out some of the data. So we're back in time now. All right, we're back in time. With the data is ended now on the 1st of February. What I'm looking for any areas of the chart where you can see gaps, right? I'm looking for gaps like this. Can I see any gaps? Let me show you again what we did on the dollar yen trade. We realized that the price peaked here. Then we made a candle, and on the other side, the lowest point was here. Right, now really important that we can see that there's a block of a candle which hasn't been filled in. All right, just if you want the technical term, I don't know everybody's level of experience, but if you want the technical term for that, this is called imbalance. And so part of what Dimitril and I are doing, and only a part of it, we've got many skills and many tools that we use to break down the market. But one of the tools that we use is to identify where there's imbalance in the marketplace, because the market usually comes back to that. And you can see that as I play it out, just so said, so done, the market comes back into there just to close off that imbalance. You see that? It did it once, and I think it actually does it again to close it completely. It comes in usually about halfway, and then sometimes it comes back in and closes it completely.
Hello, can I ask you something about this imbalance?
Please, sorry.
You move chart left to see a spike. There are 2 spikes there.
Over here?
Lower.
Here?
There. Yes, there are 2 spikes.
Yes.
Is there any possibility that one of that spikes to be correlated with your imbalance?
So, and the way that I would do this here,
the second one,
I would just drag a line across, and that's yes. Really nice. And you can see, look here, you see where the price comes back to. came back in there perfectly.
Yes.
Yeah.
So could be this imbalance not be seen correctly if we had in the past two spikes like that?
When you say could it not be seen correctly, are you saying could it be
Could
not
be
real?
a fake one, a fake imbalance, or no?
There is not fake imbalance. Imbalance is when the market, the banks, they buying or selling quick, and there is not selling or buying. So if they buying very quick, there is not sell in that particular area. So they need to be buy and sell everywhere. So this is why they come back and they mitigate that area. I highly recommend you to, and you know my channel regarding imbalance, and
Yes.
go there, because I spend about 20 minutes, I don't know how many minutes, on imbalance and mitigation candles, so you can understand quicker. And we just want to see if we can make some money. We don't do
I understand.
trading,
Just I asked about the
but I
second
highly
one.
recommend you just to go there.
No, that's fine. I really appreciate the question, Soren. Yeah, I've never heard of a fake imbalance. I don't know what that is.
Me either.
But the one thing I do accept, right? This is the thing. I accept that, I don't know everything, and I always start from the position that I don't know every single thing, and there may be concepts which I don't know yet. So, I would never say that I would never say you're wrong. I would just say I don't know. I don't know about that concept. But what we can see in this example is that everything here has been balanced off to this point, right? Everything here looks to be clean. Oh, down here, there we see another one. Okay, so let's see if that is clean.
Yes. That can be target for the future.
This can be a target. So here we see another one. All right, let's see. Okay, so there it is here. I'm just drawing it like this so that everybody can see it. But in reality, what I do when I'm on my own is I just put a little box in like this. Right?
Same as me.
I just put a little box in just like that. And that tells me that this is an area that the price has not balanced off yet. Has not balanced off yet.
And can be a possible reversal price action there. So
let's look at that, at least on the 8 hour, and then I would recommend for everybody that you stay organized. So at this point, at least while we're here, I make a note to myself, 8 hour imbalance. This is where we are right now in the journey, and if the journey changes, then we can change this. We can change what this says. Okay, so at the moment we spotted 8 hour imbalance in here. A good possibility the price could, no guarantees, but the price could come back into there. Okay, let's be like that eagle, and we continue to circle and circle and circle, and let's just play it out. I don't know, maybe the price did this already. This is in the past, so maybe the price did this already. Let's just see where we are. Okay, could just close this off.
That's good.
Okay, this is nice. This is really good.
This is our target for the future.
Yeah. Now it's after, you can see that on the lower time frame, on the 6 hour, it's not there. That's also cool. But on the 6 hour time frame, that imbalance has been closed off. So again, no guarantees that it's going to go back here, but at least on the 8 hour time frame, there's a possibility that it can come back and dip into here.
Yeah, on 6 hour, if you can go back, we have a mitigation candle which has never have been mitigated. The exactly. Left one is with the volume,
and this is the
bigger one, Leon.
This one here, yeah.
Yeah, there must be mitigated because there the banks, they are in drawdown in that candle, so yeah, they have to come back there. That has been mitigated, but the other one, 6 hour, that big one, did not.
Okay.
The small one, the one you show me, they are together in one, you know. So
this is
we refer to the bigger one.
This is it. And now for me, although you can look at them together, I like this entry here. All right.
Yeah, me too.
I like this entry a lot. And all we're trying to do, let me just explain it to you like this. I keep saying it over and over again. Since I'm talking to a lot of different people about trading. We got a really, really large community. I'm regularly teaching on these communities. For me, the one thing I love the most is to put my money to work in the most efficient way. I like to find the very, very best reward to risk. So, you know, there's no reason for us to buy up here. Even if we think the price is going to the moon, even if we think the price is going all the way up here, there's no reason for us to buy at this level. We want to find the best with the best possible entry so that our money is put to work as good as possible. Now, watch this. Let's just assume that the price does come back into our area. It will go in, let's just use this one here. The price comes back into our area like this, it comes back into our area like this. Well, still, once it gets there, I'm not just automatically going to just pull the trigger. I want to wait. I want to see how long it stays in here for. Maybe it goes quickly, but the real entry that I want to get out of this so far is looking like it's going to be around here. So this is what I would do so far. This is what I would do right now with what we have. I'd leave that there. I go over here and I take my horizontal ray. The horizontal line goes all the way into the future, into infinity, into the future, and all the way infinity into the past. All right, that's the horizontal line. Now I like the horizontal ray because it tells me the starting point. It tells me where I'm actually interested in. And I will put that here, and the horizontal ray will start from here. I change this to be entry. And then on this entry candle, I've got some preset pieces of information. And this is on the 6 hour. I call it last down candle. Last down candle, 6 hour. Okay, so now we're starting to build a little picture for ourselves. We're starting to build a little bit of a picture. We've got imbalance right before an entry. For me, this is perfect. It's so good in terms of tight entries. Having an area of imbalance, if you're looking to buy, having an area of imbalance that sits just above an entry is absolutely perfect. Right, that's exactly what we want to be looking for. And let's just continue to circle like the eagle. Let's see if we can find anything else. So now, okay, I've got the entry down here. I don't think there's anything lower. A quick check says to me, I don't think there's anything lower. It all looks to be proper price action down here. So I'm good with that. Maybe I miss it. I don't catch them all. Sometimes your eye misses it. But let's just see if there's anything which would prevent the price from going down here. I think I like this. The problem with this trade is that you're going to have to wait for it. This might not happen for weeks. Okay, that's the only thing with this trade here, is that you're going to have to sit here and just wait for it to happen. All of this is clean. Yep. Yeah, well, we are in waiting mode. We are in waiting mode. So if we were to take a trade from here, we'd have a very nice one. Let's go back out to the 8 hour. I want to see what happens at this entry here. So I think we found it on the 6 hour. Okay, so just because we don't need all of the data, I'm just going to take it out for a little bit to make the price nice and the chart nice and clean. And we can write up a potential trade entry. It's far from where we are, right? It's far from where we are, but I don't see anything else that's going to really excite me at the moment. So the trade entry would look like this. It's a GBP Aussie dollar high limit. And then let's say that we found this trade today. I realized I needed to add this. The trade is going to be called on the 17th. This is when we found it, 17th of March, 2021. And then time is now, let's just say 3 p.m. Right. And the details, entry. I like this a lot. I like this setup a lot. It does look balanced, but I do like the setup. It looks balanced on this time frame. So we're going to say entry is 176.17. And I'd be prepared to put my stop loss right underneath here. All right, so we've got 40 pips of stop. And, you know, let's see if we can make it tighter. Hold on.
I believe when the price get there, we can find a tighter
price
stop
entry.
loss, you know.
Correct.
Just we wait. We can call area of interest, point of interest. Once we put the alarms there and we wait the price to show us a sign of the reversal.
So Dimitra, look what I just found on the 1 hour chart while we were looking for a stop loss. Look what I just found on the 1 hour chart right here. Okay.
Yeah, is that imbalance? Plus we have the
It's
mitigation
absolutely
candle.
all right. So now what we do here is we found a smaller area of imbalance. This is really nice. So now we continue to take our chart from here like this.
Yeah.
Okay.
Perfect. Sounds good.
And now what do I need to do? I need to go back and change this label to be 1 hour imbalance. Even better, I much prefer a 1 hour imbalance than an 8 hour imbalance.
Let's drop down 30 minutes or 15 minutes to see if we can go even tighter.
Yeah, exactly. Let's see. That's the same.
13 is the same. 15.
Okay.
Oh, wow. Better 15.
Right in here, yeah?
Yeah, lower. Yeah. And this 15, you can see it's opposite. We have mitigation candle, the one which has a volume. So yeah, that one. This is so we can, if we want to go even tighter, we can go in middle of that or top or middle.
And you know what, Dumi? I like the 15-minute for because we're looking so far back. At this point,
yeah,
we put an alarm on and we say we come back here. Now,
yeah,
the last thing I would do at this stage here is we had this as a 6 hour last down, but I would actually move this to here. This is just a really nice entry right here.
Exactly.
Yeah, the last down candle before the up move. So I'll just put this one.
Yeah, true.
Okay. And this is where I want to enter my trade. And so we can already amend the details.
How many pips we have from there to the bottom?
Oh, from here to underneath here. That's
yeah.
So we have let's put it on. Now this is going to be the thing. I want to show you this and then we can close up long position. So I'm going to put this on as a trade. And I will put my trade underneath here, my stop loss underneath here.
21 pips, not too bad.
That's okay. And again, we can massage this when we get closer to it, okay?
Yeah, exactly.
21, 22 pips to keep us safe. Okay, let's move that out. Let's start to move that up, and we build up the time frames again. Move that out. I mean, the risk to reward on this could be crazy, to be honest with you. Okay, and we move this up. Okay, so even if we were to get back to where the high is now, even if we get back to the peak, then you've already got yourself a 5.5 to 1 trade on that. All right, so let's put this in. 10 is the entry now. Stop loss. Stop loss is at 87. Because how many is that? It's 23 pips. Yeah. And we say TP1. TP1 is at 77.37. That's a lot.
6.
I think we need to see how structure plays and how it gets there, right?
Yeah, exactly.
The way the price gets there will tell us what our TPs are. But you know, let's just use what we've got. We've got 1.7737. And let's just see if we can get anything bigger on the higher time frames. I mean, lovely. Look, what we would really want is for this to break up above here. Right? We want it to go up above here, or really up above here. But let's just take it one bit at a time. TP2.
Too greedy.
Yeah, 77.94. Let's just leave it there as TP1. We need to see how the structure gets there first.
Yeah.
And then we figure that out, okay? Take these highs. TP2 at 177, 178. Let's just do that. Okay, cool. Leave it there for now.